The December Fed meeting, Tyler, showed that no Fed members thought it would be appropriate to cut interest rates in 2023. All of them in their forecast for rates raised the path of their funds rate relative to where they were in September. The restrictive stance most officials believe was needed until they were confident inflation was coming back towards their target. Several said that history warned against loosening monetary policy prematurely. Still, Fed officials said they were flexible in setting policy due to the uncertainty of the outlook, and somewhat contradictory, they said they were still data dependent. However, they emphasized that just because they slowed the pace of rate hikes did not mean that their resolve was weakening about fighting inflation. Participants warned against, quote, an unwarranted easing of financial conditions. I'll come back to that in just a second. Now, they did acknowledge in a very small section in these minutes the risk of tightening too much, but they kind of then dismissed that by saying the inflation is the biggest risk to the economy and the one that ought to be addressed. Participants, they cited the possibility that price pressures could remain elevated. Only a couple saw the inflation risk coming back more into balance. The labor market, they said, was very tight. Inflation was unacceptably high. Remember, the context of the meeting is that consumer spending had been pretty high in September and October, as well as financial conditions had eased leading up to the meeting. Finally, just a couple things on the outlook of Fed officials. They say economic activity in 2023 is likely to be well below trend. Of course, they did forecast that half a point increase in GDP, and they said that a below-trend economy is going to be needed in order to bring inflation back in the balance. Just two sort of positive or dovish comments that were really not backed up by much, but it did say many participants see housing inflation decelerating and risk to the economic outlook. This is not a positive here. We're weighted to the downside. Kelly?
So I'm just looking at the market. The market, Steve, taking it. I don't want to say dovish, but what do you make of the fact that stocks are a little bit there? Anything you want to add before we move along, Steve?
I think you would make a mistake to take a dovish interpretation of these minutes. They're pretty on the hawkish side, pretty resolved. You know, it's almost like they're tailored to be send a very strong message about how hawkish and how serious the Fed is on inflation.